Hi, I'm Jim Gordon and you're watching Market 1 Minute. Joining us today is Darcy Crowe. She is the Senior Vice President, Portfolio Manager at Canaccord Genuity Wealth Management. Welcome.
Thank you for having me.
You're quite welcome. Okay, what are alternative investment strategies?
So alternative investment strategies refer to non-traditional methods of investment, which are designed to deliver a unique and uncorrelated return stream. So in our Crowe Private Wealth alternative investment portfolio, we deliver access to things like alternative credit, private debt, long-short equities, private real estate, and arbitrage opportunities.
How is the performance of these alternative strategies compared to more traditional investments in the past?
So if you look at our Crowe Private Wealth alternative portfolio, since inception, it's actually delivered a net return that's higher than the TSX. However, it's only exhibited about 17% of the volatility over that time period. In addition, if you look at the periods of drawdown, since inception, our alternative portfolio has actually delivered 23 positive quarters and 0 negative quarters over that time. And that would compare to the TSX over the same period that's delivered 14 positive quarters and 9 negative quarters. So significantly reduced drawdowns through periods of market turmoil. So this speaks to the stability and the continuance of returns over time and a greater and improved investment experience.
And who has traditionally made use of alternative investments?
So alternatives play a critical role in the portfolios of institutional investors and family offices, often deemed the smart money, as they look to deliver stability and returns to their end clients. So if you look at the asset allocation of an average family office, for example, it's going to look significantly different than that of a 60-40 portfolio. So studies have shown that over 50% of assets among these institutional and some of the world's largest pension plans and endowment funds are actually allocated to these alternative investments. If you look at the high net worth category, you're getting close to the 20% allocation. However, if you look at the average retail client, a majority of these clients actually have no allocations to alternative investments at this time.
Last question for you. Why is it critical to incorporate alternative strategies into your investment portfolios?
So the traditional 60-40 portfolio today no longer offers an attractive risk-reward opportunity, and you often see in periods of market downturn that wealth is just not adequately protected. So there's 3 key points that we like to point out in terms of the benefits of these alternatives. So first of all, they offer an uncorrelated return stream. So as globalization increases, we're seeing that public equities and fixed income are more and more correlated over time, and therefore when markets decline, assets are just not protected. Secondly, given the private nature of alternative investments and the diverse nature of alternative investments, they've delivered a significantly reduced volatility within the portfolio. So lastly, by introducing these uncorrelated assets, significantly reducing the volatility of the portfolios, it's overall a much greater investment experience for the investors.
Darcy, thanks for joining us.
Thank you for having me.